there's a mirage of supply. That's what it looks like. There's a mirage of supply. And there's unrealistic expectations on behalf of both investors with the companies and utilities for expected supply.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our resident uranium expert, Justin Huhn of Uranium Insider. Justin, thank you for coming back on the show.
Happy to see you again. How are you doing, Steve?
I am just capital, sir. Pleasure is all on this side of the table. We got a lot of questions here and a lot of smart ones too. A lot of sharp questions. You had to do some last minute research here to find
great questions. Some great questions this time. Yeah, I'm looking forward to it.
Yeah, no softballs. I'm excited about this one.
I like the hard ones.
Let's start out like we always do. And what is your macro outlook for the uranium market today?
Macro outlook, the supply and demand situation hasn't really changed that much. Supply is slowly responding. And the big concern is really going out late decade, early 2030s, where we have a large and growing supply deficit that is looming over the industry. Supply is going to struggle to catch up to demand without much, much more price incentive and investment on the mining side and the production side. As of right now, we've had only 18.6 million pounds secured in long-term contracts year to date. So we are almost 5 months into the year, and we're basically about 35%, 30 to 35% if we were to annualize that of replacement rate, maybe even less than that. It's definitely a situation, and the results of that low demand in the long-term market has been much higher demand in the spot market and the carry trade market. So utilities are decently active right now. They're not pouring into the market, procuring in large volumes, but they're poking around. To give you one quick data point, typically the overall spot traded volume is less than 20% utility interest. So most of the volume in the spot market, typically, let's say going back five years to average that out on an annual basis, less than 20% of that volume is utilities procuring. So end user demand in the spot market. Most of it is pounds traded back and forth. Of course, in 2021, 2022, a lot of that demand was from the Sprott Physical Uranium Trust. Now, this year to date, utilities are about 70% of the volume that's been traded in the spot market, and spot market volume is way up from last year. So that's not only direct involvement from utilities buying uranium in the spot market, but it's also carry trades being done with financials and traders, and those entities go into the spot market to cover in order to carry those pounds and hold them for 2, 3, or 4 years to deliver to their utility customers. So carry trade's picking up, spot market volume and demand is picking up. It's been quiet for the last week and a half after a decent move up off the bottom for the spot price. So we're in this very, very interesting period right now where everybody wants to know. And of course, this is one of the questions that came in. Is this a sell in May and go away and come back in September when the WNA hits and utilities come back, they get new budgets. A lot of utilities get new budgets October 1, the classic seasonality trade, or are we going to see some continued movement? And I don't have the answer for that. What I can tell you is that looking at the entities that have been participating in the spot market over the last multiple months, it seems like positions are being taken. The motivated selling that was in the spot market December, January, February is not there right now. And the interest on the buying side has been increasing. Now, like I said, the last week or so has been quiet, but multiple utilities are expected to come out with RFPs soon. And we believe that two things are going to influence much more utility involvement that will come in even during the slow summer months if these two things pan out. One would be a quantifiable peace agreement in Ukraine and an understanding on behalf of utilities of what that means. So whether or not that means they are able to come back and engage in new business with Russia or not. So just clarity there is going to bring more utility demand to the table, period. The other thing would be, what are we going to see out of the US Trump administration in terms of nuclear support? A bunch of stuff has been leaking out there. A week and a half ago, there was announcements that the Trump admin wants to quadruple nuclear capacity by 2050. And everybody just kind of rolls their eyes because that's an enormous goal to reach and looks way out of reach based on the current policies in place and what the US utilities are doing or not. They all want to build new nuclear, which is incredible. But they need clarity on what the Trump admin is going to do, if anything, to support that. So it's been really mixed signals coming from the Trump admin. Are they cutting? Are they not? The spending bill looks like it's going to be just a more of the same in terms of the overall budget deficit. So likely that we're going to see the DOE loan program in place. It's going to remain more than likely with funding for new nuclear projects. What else? What other kind of nudge is going to come from the admin? We don't know yet. It's going to be something. They also leaked out that there are multiple executive orders on the table to accelerate the growth of building out new nuclear in the United States. So we know that that's coming. We just don't know what it looks like. Clarity there, clarity on the Russian war front. Both of those things are going to bring much more, let's say, confidence in making $100 million, multi-$100 million decisions in these long-term contracts for nuclear utilities. So that's kind of what we're waiting for. In the meantime, the stocks are up, 25 to 50% off the lows of last month. The spot price is up about $5, moving in the right direction. Now it's kind of this quiet period where everybody's going, what's going to happen here? Hard to say. We're very constructive. Of course, I don't really care what happens in the next 2 or 3 months. Long term, everything looks just very, very solid on the supply and demand front. We expect significantly higher prices even by year end.
Okay, so we're more than 5 months into the year, and only 18.6 million pounds have been contracted, which, to put into perspective, they typically need about 180 million pounds for the year. So we're nowhere near that, right?
It's more than that this year. Yeah, we have the actual demand. If let's take out secondary demand, which would be financials, inventory restocking, et cetera. Just reactor burn, we have at 108, 198, about 199 million pounds from reactor burn up.
Okay, so we're not even 10% of that. Spot market has done something interesting this year in that normally it accounts for about 20% of the utilities purchase. Now that number is 70%. So utilities are stepping into the spot market to try to bolster their inventory. Carry trade is picking up, and which is pretty interesting. I'm going to share my screen here, and this is courtesy of Cameco. And let me zoom in on this part. And we can see that the blue line here is the spot price, and the black line up here is the long-term price going out 12 months or more. So there's a gap there, and carry traders are starting to take advantage of that, just like they do every year. One thing you mentioned about the Trump administration that is encouraging, at least I interviewed Rick Rule maybe a week and a half or 2 weeks ago, and he said that he and Trump have some mutual friends that reached out to him, and they asked him, they said, hey, what can we do to, streamline some American minds and like that? And basically what happens is, I guess, with these executive orders is if previous presidents have put executive orders in place, you as the sitting president can simply stamp a document and get rid of that. And he said, so their administration reached out to him and said, like, hey, what states should we focus on? If there's any executive orders that are holding any of these things up, we can make those gone right now. And so that was really encouraging, so he told them which states to focus on, and I don't know, we'll see if anything comes of that. But yeah, that was pretty encouraging, and that goes in line with what you were saying right now.
Yeah, 100%. They are already starting to fast track mining projects, and the first example of that is Anfield's Velvet Wood project in Utah. Just basically got a green light, and very, very quick permitting for that project. So that's definitely a good sign. And just reiterating, going back to the long-term price, spot price, carry trade, et cetera. The spread between the spot price and, let's say, more importantly than long-term price would be like a 3-year forward, 5-year forward price, that theoretically is justified based on interest rates and the cost of carry and the cost of capital for carry trades to get done. But the utility demand has to be there. So we saw a sufficient spread going back, January even into February, without a lot of carry trades getting done. Then all of a sudden, mid-March into April comes along and they start to get done. And what that looks like to us is utilities have needs that need to be met, but what they're not wanting to do yet is step up into the long-term contracting market, as is clearly evidenced by the number of pounds that have been signed this year. So they still have uncertainties. Not only it's just the uncertainties, but it's also entities like Cameco, for example, who is holding the line on the pricing environment, and they should absolutely be commanding that price and kind of a premium to some of these developer projects like Lotus's project Kyocera. They are offering long-term contract prices base escalated $80, and that's keeping the price there. Cameco is saying we want market reference, we want 75 or 80 floors and 135 ceilings. The utilities are like, well, Lotus is selling for over here, and this other project is selling for over here. Why don't we just nibble there, and we'll nibble in the spot market, and we'll nibble on these carry trades, lower volumes, 500,000 pounds going out 2, 3, 4 years, instead of coming to you, Cameco, Orano, Uranium One, BHP, and signing for multi-million pounds for delivery for 5, 6, 7 year period going out late decade and beyond. So that environment is still a little bit of headbutting on price. I think the utilities are coming around to price. Everything is more expensive globally, over the past few years. So it's not just inflation. If you chart inflation against the current price, these prices barely come off the bottom if you're inflation adjusting, let's say, to the previous moves in this market. So pricing environment is slowly coming into acceptance, but utilities are stepping in because they have some demand that needs to be met. They're getting it done in the carry trade market, in the spot market. On balance, still low volumes. We're going to reach a point, and that could happen with these two elements of clarity in the next couple of months. Definitely is going to happen by year end, where we're going to see large utilities come into the long-term contracting market and sign much, much higher volume contracts. And that's coming. So this period of time right now where it's quiet, I just absolutely love, because my confidence in how this is going to play out is extremely high.
Awesome. Right on. Okay, infrastructure, supply chain, and permits. Milos wants to know. He says, what's the current status on North American conversion, enrichment, fabrication facilities, if any? Will North America ever see full capacity to cover its own needs?
North America is doing a pretty decent job on a few fronts, but not on all fronts. So they're definitely in a good position with conversion between Cameco's Port Hope and ConverDyn's facility in Illinois. So it's about 31% of the total global conversion capacity exists between Canada and the United States. So that's definitely, on balance, capacity-wise, self-sufficient on that front. Enrichment, that's another story. Canada has no enrichment, and why would they? They operate 100% CANDU reactors. That's going to change with OPG's BWRX 300s that they're building at Darlington. They're building a series of 4 of these reactors. The first one is under construction right now. They've already been out into the market buying uranium, by the way. They did that last year. For this project, it's expected to be first commercial production in 2030. And that's kind of a side note. A lot of people think the SMRs is the 2030 story. It doesn't matter. Well, the first one to be built in North America, one of the first ones, the BWRX 300 at Darlington, the utility that's building that reactor was buying uranium last year. So that's 6 years before it was expected to be grid connected. They were out there with an RFP to buy uranium. So you see SMRs expected to be first commercial production 2031, 2032, 2033. Well, guess what? That's demand in the next few years in the market, period. Okay, but going back to the user's question, enrichment, like I said, Canada doesn't have any. Urenco and Centrus in the US have about 9% of total enrichment capacity. Now, the United States alone is about 25% of total global capacity for nuclear. So clearly we don't have sufficient enrichment capacity. And that's why the US utilities are so reliant. They buy 25% of their enriched uranium from Russia, roughly. They buy a little bit of EUP from China. They buy enrichment from the French. So we have a lot of work to do there. Centrus is expanding, but they're largely expanding into HALEU. Orano did say that they want to build an enrichment facility in the United States. Then, of course, we have Global Laser Enrichment that is working on their pilot project at the Paducah facility in Kentucky. So we're moving in the right direction in terms of enrichment. We have a lot ways to go, especially in the United States, to be self-sufficient on that front. As far as fuel fabrication, we're pretty much there. There's 3 different fuel fabricators in the United States that produce about 28% of the world's fabricated fuel. So we're pretty covered on that front. When will we be self-sufficient across the board in the fuel cycle? That is hard to say. If and when GLE is operational, that is certainly going to help, but they will largely be producing UF6 re-enriching tails, so they're not going to be producing EUP at least as of now. So still we have a long ways to go to be self-sufficient on the enrichment front. I
Okay,
can't tell you
so
when it's
of the three, conversion, enrichment, and fabrication, the US and Canada account for 31%, but we consume more than that, right? So we could increase a little bit there.
for
But
conversion, yeah.
yeah, enrichment, that's where we really lack. Canada doesn't have any. The US is responsible for about 9%, but we consume about 25% of the planet's enrichment demand. Fabrication, we're pretty well covered there, though. We've
Yep.
got 28%, and that's about what we need.
Yep.
Okay. All right. All right. Milhouse wants to know, will expedited permits for new mines significantly impact the projected supply shortfall?
Probably not. It's one of those things. It's certainly slowed things down for the large product projects in Canada, but both of those projects, I'm talking about NextGen's Rook One, the Arrow deposit, and Denison's Phoenix, are both very close to likely being permitted. So Phoenix, Denison is expecting the permit for Phoenix in the coming months. NextGen, we're looking at the middle of next year, most likely. Of course, assuming that everything goes smoothly and they do get those permits. As far as the example of Anfield's Velvet Wood getting a permit, this is still a long ways away from actually producing. They've got a mill that needs a lot of refurbishment, so it's not really going to accelerate things on that front. The accelerated permitting in the United States is certainly going to be helpful to the U.S. miners. I'm very bullish U.S. miners here. But the U.S. only has so much production capacity, even with accelerated permits. And most of the expected brownfield restarts and even greenfield projects in the U.S. are already permitted. Those are in Texas and Wyoming. So not going to meaningfully change that much in terms of how much supply is going to come on in an accelerated manner.
Okay. So probably, maybe a little bit, but not a whole lot.
It's good for the miners. It's not going to really move the needle in the big picture for supply.
Okay. All right. Okay. So on an individual company basis, that could be huge, but
Sure.
global picture, not making much of a difference.
Right.
Okay, and the award for the best series of questions asked goes to Mick, and he's got the most thumbs up, and we had to dig into this one. Okay, so he's basically asking about Western and non-Western enrichment and conversion, basically percentages of both. So we've been talking for, man, I don't know, 3 or 4 years now, Justin, and we've always kind of believed that there's going to be a premium put on American producers simply because of the sanctions and everything that happened with Russia, and just uranium produced at home is probably going to be a little more valuable than uranium produced in Russia, right? At least to us as investors. So he's saying, can you quantify the size of Western and non-Western enrichment and conversion capacity, the amount Western mined versus non-Western mined, the amount currently Western mined uranium going to non-Western processing, the amount of uranium used by power plants in the West versus the East?
It's a really interesting question. And I agree with you. I think Western production, especially in the United States, is going to probably get a premium in the years going forward as demand is likely to increase in the United States, considering that all the utilities want to build new nuclear and we're still the biggest market in the world. So likely we'll see a premium there. And the market has definitely been somewhat bifurcated, even though the actual sanctions on material coming out of Russia. So for the sake of this conversation, we'll say West and East is kind of BRICS versus OECD. And there's a little bit of a gray area. For example, Namibia is a very Western friendly country. Most of the production out of Namibia is controlled by the Chinese. So we're going to put that in not all Namibian production, but in the Eastern camp. And of course, the biggest story on East versus West in terms of uranium production is in Kazakhstan. Kazakhstan has, for the last decade or so, been very friendly to Western consumers, the EU utilities and North American utilities. In recent years, much of the demand in Kazakhstan has been coming from the Chinese. So not only do they have the second largest JV partner behind Russia, so the biggest JV partners with Kazatomprom are the Russians and the Chinese. The Japanese have a smaller project, a couple small projects. The French have Catco. Cameco has Inkai, JV. But the rest of the joint ventures are Russia and China, essentially. And then you have Kazatomprom's own 100% or attributable production, and most of that production going out, to 2030 and even into the early 2030s has already been consumed by China via very large long-term contracts. So the bifurcation within that country is significant. You could argue that Kazatomprom is a majority state-owned company, and Kazakhstan still has large influence from the Russians. I think both of those are reasonable arguments. So even the production, that is Catco and Cameco, and I think that there's kind of tea leaves evidence there that sulfuric acid in the country is not necessarily being prioritized for these Western joint ventures. Much of the prioritization of that asset is going towards the Budenovskoye 6 and 7 project, the big joint venture with Rosatom. So that is all to say that the OECD, importantly, is about high 60th percent, up to 70% of global demand, or let's just say global nuclear capacity, which equals global demand on a burn-up rate, not necessarily on a procurement rate. We know the Chinese have been much more aggressive in procurement, and their burn-up, total demand burn-up is rising as well, rising very, very quickly.
Well, because they're building so many, and so they got to front.
Exactly.
Yeah.
Exactly. And India is building a lot. Russia is building a lot globally that they're going to control. So that 70% OECD in terms of overall global nuclear capacity is dropping. But right now, 68 to 70% is, and so we could argue that based on a burn up rate, 68 to 70% of the uranium demand on an annualized basis is coming from the quote unquote West. All right. So that's important. Now, how much of this is controlled by the East? Well, 50 to 55% is of uranium that is being mined this year is going to come from the East. So while they are only 30% of global demand, let's say, they are 50 to 55% of the uranium produced. So that is the majority out of Kazakhstan. That's the majority out of Namibia. That's all the production coming out of Russia. There's not a lot, but there's a little bit coming out of Russia, a little bit coming out of China, a little bit coming out of India. And that's pretty significant. I think that's a really, really important point. This was a brilliant question. I appreciate that he asked this because it's a very, very important topic. Most of the majority of uranium production is controlled by the East, while right now they are still a minority of the overall global demand. We go out 15, 20 years, that's going to look a lot different. The East is going to be likely the majority of global demand, while maintaining a majority in global production, unless the West really kind of gets things in order. If we look at conversion and enrichment, China and Russia control about 60% of global enrichment. They control about 45% of global conversion. So they kind of have a lock across the fuel cycle. And if the West plans on building more reactors like this Trump administration, let's quadruple by 2050, we're going to have to get our act together on the mining and enrichment front, especially. Conversion, we're all right. There's expansion possibility at ConverDyn, but they will not be expanding anytime soon. They have made that very clear. There's been plenty of speculation about ConverDyn expanding. They can go from 7,000 tons, which is where they're at right now. Maybe they're going to squeeze 7,500 to 8 out of their existing operations, but in order for them to go up to 12 or 12.5, which is I think their license capacity or potential capacity, they have to shut down operations for multiple months, and the demand based on their existing contracts is not going to allow them to do so. So great question. Overall, this is the takeaway from this is that Western utilities need to step up in a very, very big way, and they need to do it absolutely right now. So there needs to be an acceptance of the current pricing environment. They need to come to the table with Cameco, with Orano, with BHP, and they need to say, what do you guys need? I'm willing to sign, period. That needs to happen immediately. Because if we go out in the early 2030s, which really is not that far away in this market, this is where the utilities and the producers are kind of living right now. Because the producers, Cameco, Orano, Uranium One, Kazatomprom, they pretty much sold out their production capacity for the next 3 years. There's not a lot of demand for the next 3 years anyways. The industry exists in the future. We go out late 2020s, early 2030s, we have a serious problem in terms of significantly growing Western demand and declining Western production unless and until we have these big projects come online and or we have utilities sign incentive pricing contracts with the major producers so that they can continue to develop and bring on brownfield assets, develop greenfield assets, et cetera. It's a concerning picture into the 2030s, especially for the Western utilities.
Okay, so I suspected this, but after you did the work, it confirmed it. Basically, the West is responsible for about 70% of the planet's demand. The East is responsible for about 30% of the planet's demand. But the supply is coming more so from the East, 50 to 55%, leaving 45 to 50% from the West. So there's a gap there. And if they really, if for whatever reason the East wanted to put the screws to the West, they could do so.
Absolutely. And it's hard to really blame utilities here because utilities, they buy what they need to buy when they need to buy it. And if you go back the last 25, 30 years, it's been a global marketplace. I mean, from 93 to 2013, there was megatons and megawatts where Russian downblended warheads 20 million pounds a year directly to the US utilities. And that only ended, that ended 12 years ago. That's yesterday. So the fuel buyers for US utilities, and of course the US isn't the only market in the West, but the fuel buyers to speak generally, it's been a global market and they put out an RFP and somebody fills it. And that's how it's existed forever. Now, it's dangerous to say this time it's different, but it really is this time it's different. We really do not have the safety net of secondary supply and inventory overhanging the market right now. It's just not there. So what has to be there is new supply, and that new supply is problematic unless and until we have sustained prices well above $100 a pound that is going to bring it on. And that we're not in that yet, but it's very clear to see that that has to happen because we don't see where else this uranium is going to come out of. And you could argue that we've hit a pricing environment where it should have shaken out that secondary supply that theoretically would have been there. Like the Japanese are going to be loaning all this material, it's going to satiate the market. Well, that didn't happen. It didn't happen. Little bit of material here and there, right? And high prices, they will bring some inventory out into the market, but it's not overhanging the market like it has for the past multiple decades, not only with megatons and megawatts, but then you had a super oversupplied market post Fukushima when you had 15% of global demand come offline over the course of 24 months. By 2013, that demand had come off, and the Kazakhs continued to pour acid into the earth and flood the global market with uranium. They crushed the market. It was very, very stupid, or maybe it was strategic. I don't really know. But that is what happened. Huge overhang of supply. And we worked through that. That has been worked through. There isn't an enormous amount of above ground mobile inventory that's just out there for sale. It's just not there. And you can see small demand coming into the market as moving price. So very exciting setup here going forward.
Yes, yes, it is. Let's see. Bogman via Twitter is asking, "Hi, Stephen, Justin. I'm curious about Centrus Energy's ability to process HALEU. Are they doing this to scale to the extent that they can supply most American company needs? Thank you."
They essentially, at this point, are fulfilling an RFP coming from the Department of Energy to build and eventually expand a HALEU circuit. As of now, their full capacity is not even sufficient to supply that first advanced reactor that's being constructed in the United States. So no, they are not going to have the capacity to provide enough HALEU. Considering, it really depends on what gets built here right now. But right now we're looking at TerraPower's Natrium. So they're not going to have enough to even provide that first core load. The TerraPower just came out with news yesterday or after the close that they've signed an agreement with ASPI, which is a laser enrichment development company, to provide HALEU. But the first core loads of HALEU are likely going to come from the Department of Defense and some downblending of material from the United States government, just to make sure that that first load is there, that we don't have to buy it from Russia. So high hopes for more HALEU expansion. As of right now, it doesn't look like there's going to be sufficient capacity to provide for the United States expected or projected HALEU needs if we go out, 10, 15 years.
Okay. Alrighty. And Nautica wants to know, how do you feel about the correction in the spot price? Do you feel like we've hit a bottom?
I'm assuming that we're talking about the correction from last year. So let's say last January, I think was the peak. Pulled back a little bit, came back up, and then from then it's been a decline into last month.
Yeah,
So if they're talking
share my
about that
screen. I
decline,
gotta believe he's talking about from here to here, and then now we've bounced. Like, do
I
you?
imagine, yeah. So yeah, the bottom's in for sure.
Okay, okay, all
I
right.
mean, the dynamics could change. We could see a different physical market dynamic next month, but the signs that are there now, as far as traders, some utilities kind of taking their positions, not seeing motivated supply come into the spot market, seeing demand increase, seeing the volumes that we've seen year to date in the spot market, the activity of utilities, everything is pointing towards the bottom being in. Does that mean we might not pull back a dollar or two if things slow down for the summer? Totally possible. But as far as are we going back to 63, that's a hard no coming from me.
Okay. Hard no, Nautica. You heard it first on In It to Win It. Okay, we always get a baseball analogy. If this uranium bull market were a baseball game, what inning are we in?
So I've been asked this question for 6 years, and the answer continues to kind of be the same. And when SPUT came into the market, that was a very difficult moment to gauge because it was like, well, if funds keep flowing into this vehicle, we're going on a short-term moonshot to who knows where the price could be. And that was true. The funds, of course, slowed down. The price kind of stagnated and pulled back. And then we went on another run and did it again. But yes, the can keeps getting kicked down the road because this industry is so convoluted that it's difficult to gauge every single element of this industry all the time. So, what happened in the last 18 months? Well, the price spiked and that caused utilities to pull back. That's what happened. So, what did they do? They pulled every possible lever they possibly could to avoid coming in and signing term contracts at these higher prices. So they bought a little VUP from China. They bought a little bit more from Russia. They've done a little bit of carry trades. And importantly, they've drawn down some inventories and have flexed up on legacy contracts. So the extent to contracts, and this is one of those things that's actually impossible to get true numbers on because the contracts are held under NDAs. The producers and the utilities will not tell you exactly what is in these contracts. So knowing how much contracted volume from 2018 to 2022 roughly had flex provisions in them with, up to 20% flexibility. Most of them did, I'll tell you that. So utilities have been able to say, hey, Cameco, that contract we signed back in 2018 that was at $40 fixed for 60% of the contract and 40% market price at the time of delivery. Well, 60% of that contract is fixed at 40. Yeah, we're going to take that extra 20%. Every utility did this in every single contract that had that flexible provision in the contract. So that has allowed the can to get kicked down to the road more than any of us predicted. All we can really do now is take a snapshot of where we are. We can look at what happened in the past, and that can inform where we are. So we can see what happened and all of the mobile inventory that SPUT consumed, that Yellowcake consumed, that Goldman Sachs and Mockery and a bunch of other funds have consumed. The volumes in the term market, what China bought from Kazakhstan, what China consumed in the oversupply of the previous decade following Fukushima. Probably half of the mobile inventory that was oversupplied in that decade went to China. The other half has had to been worked through by the industry. And we're there. So we can look at that picture. We can look at where we are, the supply deficit that exists this year, which is about 20 something million pounds off the top of my head. Then we go out in the future. What is the likelihood of these big projects coming online on time, on budget? It's very low. The picture is phenomenal. What inning are we are? Well, I'm not going to say we're at the top of the first inning because you have to take that into account. What has already happened? And the consuming of that mobile inventory, everything that has led to this point has had to have happened in order to get us here. And you could argue as much as I can beg and plead for utilities to kind of look at the supply and demand picture that UXC, your trusted source of information for the last 30 plus years, even they who are conservative are telling you we have a supply problem in the next decade, and you guys got to step up and you got to do it soon, and prices are heading higher. This is what the conservative price reporters are saying and the analysts are saying. As much as I can plead, it's what is going to happen is going to happen. And I don't think there's anything that's going to stop it. We're going to have a drastic supply shortage, and the price is going to go far beyond incentive price. Incentive price is just for the marginal pound. Where the price is going to go is going to be based on multiple entities being uncovered, fighting for a limited supply. We're not there yet. We're not there yet. That is going to happen in the next few years. So are we at the top of the first? No. We still have a long runway, though. I think we're going to see at least one or two more iterations of higher highs, higher lows in the price, kind of like what we experienced late 23, early 24. That's going to happen again, probably at least a couple of times before what ultimately could be a blow off top panic kind of crazy spike. So let's say we're in inning 2.
Okay. Okay. And for our friends across the pond who enjoy cricket and don't follow baseball, there's 9 innings. And so we're 2 of 9. Okay. Does Justin expect, this is from Gmere, courtesy of the YouTube, does Justin expect another seasonal sell-off to take place in the uranium market this summer similar to last summer?
Again, I don't know. It's the setup right now is looking more constructive. Last year we were coming down off of a price spike, and we had entrants kind of pulling back from the physical market, utilities pulling back from the physical market. The opposite is happening here. So the odds are better this year that we see an improved pricing action in the spot market and likely utilities. The other thing is the term price. Term price isn't stable. It's been within a $2 trading range for more than a year. And if you go back, you can go to Cameco's website. They have a page where Cameco's term price is a blend between UXC and Trade Tech. You can, and I think it goes back 3 or 4 years. You can go back and look, and there's periods that will have 8 to 12 months of stagnation, and then 6 to 10 months of a move up.
Yeah.
Let's see. If you scroll down, I think they've got the table.
Oh, back down.
You can scroll
here.
down on that page. Yeah.
Oh, scroll down.
Scroll down. Yeah.
There we go.
There you go. So 2021. So you can, that's spot price. If you go down a little bit more,
Term.
there's the long-term price.
Okay.
So you can see it was stuck 33, 34, and then it jumped up to 53.
Yeah.
52, and then it stuck there for a year, and then it went up to 68, 70. It was there for a minute, then went up to 80. Now it's been within a couple of dollars trading range for a year now.
Yeah.
So we've had these periods where we go 8 to 12 months of stagnation, 6 to 10 months of a move up, 8 to 12 months of stagnation, 6 to 12, 8 months of moving up. Now we're at the tail end of a 12 months of stagnation. So you know what happens next.
Okay.
Doesn't mean it happens next month. Okay. No. But if we have clarity on those pieces, I think we're going to see more activity this summer than we typically do.
Okay. Let's see. Brian wants to know your take on Australia uranium companies. So they're kind of unique in that they don't have any nuclear power plants, but they mine this stuff. What's your overall take on?
I don't know if he's referring to ASX listed equities or the companies that are actually mining in Australia.
Okay.
So hard to answer. My biggest concern right now about ASX listed uranium equities or ASX listed anything is the Liberals' proposal to tax unrealized capital gains, and that is probably going to pass.
Oh God, are you serious?
Yes. It's specific to a certain type of retirement fund, but guaranteed there's ASX listed equities held in some of these retirement funds. So, and that could pass as soon as I believe July. And if that passes, we're going to see accelerated selling pressure on anything that's held in the Australian exchanges in those funds that are going to be taxed for unrealized capital gains. And this is a big, really, really effing stupid thing for them to be doing. Really, really stupid. And this would be a first for the developed world to be cap and taxing unrealized capital gains. It's really, really stupid. It's unbelievable. Truly, it's going to cause a wave of selling and whatever those funds are holding.
Yeah, I went into kind of a lot of detail in the Rural Classroom with Joel Littman on this when we were coming up to the election. This was one of the things that Kamala was talking about, along
Yes.
with price fixing groceries. So what you get is you don't get cheaper groceries, you get no groceries, right?
Right.
And if you do unrealized capital gains, how do you do the math on that? Okay, does the clock start January 1st and end December 31st and then reset January 1st? So like what an accounting nightmare. His basic takeaway was you're going to need 4 to 5 amount, in the United States of just CPAs and tax guys just to try to figure this stuff out. Where do you start and stop the clock? Do you get to claim losses on unrealized capital losses? But it sounds like Australia is actually going to go through with this experiment.
That's what it's looking like. I think the odds are that it passes because, excuse me, it wasn't liberals, it was Labor. They have a majority in the government right now, so it's looking likely that it's going to pass. But I'm sure I'm missing some detail on this. So, but it's worth looking into and trying to better understand what the funds that would be eligible for that unrealized capital gains tax, what they're holding. It's something that we're definitely going to be looking at more thoroughly as the next month progresses, and this is to be voted on.
Okay.
But besides that, I think the ASX stocks, they tend to have more leverage to the upside and the downside. So, they've been hit harder, but part of the reason, they've been hit harder the last year or so, but part of the reason is that they moved harder to the upside before that pullback. So I think there's multiple ASX listed uranium stocks, barring the potential selling that could come from this unrealized capital gains tax if that passes. Barring that, look like buys to me. So if we can determine that that's not going to happen or not going to have pressure on these stocks, I think these are buys.
Okay.
And speak generally.
Okay. And they could only do this to their own citizens, right? They can't do that to us.
That I believe so.
Okay. Yeah. Man. Right? When you think government, I mean, the DMV is essentially running our lives. All right.
Yeah.
Uh, QFT wants to know, is ASPI a fraud? That's the isotope one.
I usually don't talk in detail about specific companies, and I haven't done personally super deep research on this company, but I do communicate with people who have. I don't believe it's a fraud. How quickly or how efficiently they will be able to enrich uranium. They also have business that's, part of the news that was announced yesterday with the TerraPower MOU is that they're going to be, I think they made an acquisition in the helium space. They're also producing medical isotopes and things like that. So not medical isotopes, but other laser enriched elements. So complicated business. Is it a fraud? I don't believe it's a fraud, from what I
Okay.
can tell.
All right. We got a
But
few
do
more
your own
questions.
due diligence, please.
Yes. Disclaimer. Jeffrey wants to know updated thoughts on Niger's situation and the prospect of funding from a royalty company.
I'm assuming they're talking about Global Atomic as far as royalty funding. It seems like it's always a possibility. I know that the uranium royalty guys visited Niger recently, so that's something. It's not looking very positive for Orano, so that doesn't look great for the quote unquote West. Orano is sitting on a few million pounds just stockpiled there, and those pounds are probably going to end up in the market somehow at some point. Whether Orano is going to be able to get them out of the country is still an overhanging question, but I think that they're now starting to consider selling them to another entity that can get them out of the country. So that's probably Russia or China, who have established a presence there. It does look like relations with the US is improving with Niger. So that's a good sign as far as funding goes. Royalty, I don't know if it's going to happen or not. I don't have any inside information on that, but I do know that they visited the country and it's always a possibility that that could happen. Either way, Global Atomic, in almost impossible circumstances, has continued to build a world-class mine. So Dawson is going to be a mine. I don't know at the end of the day who is going to have part ownership, how it's going to pan out. But amazing what they've been able to do considering the circumstances. And it's the highest grade, pretty much the best deposit in the entire continent. So somebody's going to want it. And as uranium gets more and more profitable, it's going to happen. I just don't know exactly how.
Okay. I'm going to see Scott in a couple of months. I'll pick his brain.
Nice.
Okay. Keystone wants to know, at what uranium price is it economical to reprocess spent fuel into MOX?
That's an interesting question. Well, the majority of the MOX, the mixed oxide reprocessing, is happening in France and is happening in France regardless of what the price is. So, at what price will more mixed oxide fuel processing capacity be built? The Japanese are building a little bit right now. You know, I mean, as the price goes higher, it definitely looks more attractive. I would say sustained prices over $100 might make it look more interesting, and we'll get there. But it's an expensive process, and it's not exactly just the cost. It's not necessarily an easy process to undergo. You have to handle plutonium, and that's something that not everybody's willing to do. So it doesn't look like it's something that many entities are really all that interested in doing. The French have been doing it for a while for fueling their own fleet, but they don't do it because it saves them money compared to buying natural uranium, and running it through the fuel cycle. It's almost like it's more of an ideological type. Look, we are reprocessing some of the waste, we are producing less waste, kind of thing. So yeah, but high hopes for fuel recycling and more expanded and different types of fuel recycling for the future. I think it's definitely on the table.
Okay. All righty. So are they doing that just as like to show that we're doing good for the environment, kind of regardless of whether it's economical or not, or?
I mean, at the time that they expanded the MOX circuit, let's say, the uranium sector had undergone major price spikes in the 70s, and then again, in the mid 2000s. So it's obviously a volatile price movement commodity. But I think it was more along the lines of to see that we can do it, and to have that as a feather in our cap for the French, to be able to have yet another element in the fuel cycle, and they've got every other element of the fuel cycle as well. So as a majority nuclear country, they want to be able to do what they can with the waste, in addition to convert, enrich, deconvert, fabricate, cover it, soup to nuts.
Okay. All right. Interesting. Proof of concept. Okay. Jeffrey wants to know, how do you model SMR uranium consumption and how it compares to large reactors, i.e., how many pounds of uranium per gigawatt for different SMR designs?
So the advanced reactor designs that will utilize HALEU fuel, if you assume a 19.9% enrichment level for that HALEU, they will use about 2.5 times the natural uranium feed per gigawatt. So on a energy production basis, 2.5 times more uranium feed for HALEU versus low enriched uranium, 5% ish. We model SMR. Let's see. I can tell you right now. I'm looking at it in front of me. SMR demand, we don't even have that coming into the market until 2030, even though we're very conservative with this. Even though we've already seen SMR demand in the market, we still are not modeling that. So we model 2 million pounds a year in 2030, 3.2, 5.1, 8, 13. So by 2035, about 21 million pounds a year SMR demand. We think that's extremely, extremely conservative. But as far as the fuel needs, we tended to kind of agree with Canaccord's model. They put out a fantastic research piece that included SMR demand in their modeling back in January. And when they model SMRs, they model that for about half of the demand from SMRs will be HALEU and half will be natural uranium. Or not natural uranium, but low enriched uranium. So, the BWRX 300 is a boiling water reactor that's going to use 5% enrichment. TerraPower's Natrium is HALEU, that's going to use 19% enrichment, and everything in between. So if half of the SMRs are HALEU and half is LEU, then you end up with this type of modeling. And I think they even modeled for more demand than we are. So that's kind of where we're at with that. We'll have to see how it pans out. I think SMRs is something that is going to absolutely snowball. That's one of those things when you ask me about, or when this other gentleman asked me about what inning are we in, the SMRs is kind of that right tail situation that, it could be nothing or it could be an absolute monster. And we don't know yet. That is in the top of the first. That's like, we're still warming up before the game. We're still stretching. So that's where SMRs are at. And the first ones are being built. China built the first one essentially that just came online recently. So how much this is going to snowball, there's an enormous amount of interest in building small modular reactors globally. A lot of entities are still waiting for the first of a kind to be built. They can put their heads around cost structures and then they can make decisions. So this could turn into an incredible trend.
Okay, okay. I remember years ago I asked you about this, and you're like, probably not this cycle. And then now it's totally changed. Like
Yeah,
the fundamentals have changed. They're building these things. They're coming.
absolutely.
Yeah, yeah. Okay, cool. Um, let's see. Tax guy wants to know. He says, with regard to term contracts, when does Justin expect that utilities will reach replacement rate volumes?
I probably think it's not going to happen this year. That's my guess. Will we see 180 million pounds contracted in the 6.5 months remaining in the year? Probably not. But I would love to be wrong. So let's say the highest likelihood would probably be 2026. I think, especially if it remains tepid for a number of months, if we end up with 100 million, 120 million contracted this year, they just don't have very many levers to pull. The ability to flex is declining as these old contracts roll off because the contracts that have been signed in the last 2, 3 years have had far fewer flex provisions in them. So the legacy contracts, as they roll off and we start to get into deliveries of contracts that were signed in 22, 23, 24, then we see less flex provisions. So there's just not many other levers they have to pull. So I would love to be wrong and love to be surprised and see 200 million pounds signed in this year, but I kind of don't think it's going to happen based on where we're at in May at 18 million pounds. So let's say 2026.
Okay, all right. That is still just right around the corner. And man, some of these names. Live competent. Okay, via Twitter. How is the newly discovered uranium deposit in China affecting the uranium market, medium and long term, considering China's efficiency in bringing projects online?
The newly discovered deposit, I believe, was thorium, not uranium. The one that they said we've got billions and billions of tons of thorium discovered. I'm pretty sure that's what he's asking about. The
Okay, okay,
uranium, the main development project for uranium for China is in Inner Mongolia, and it's an ISR project. And the resource of this deposit is not known. The timeline for this development is not known. How much they're going to produce per year is not known. We are modeling this. Let me see. I'm going to tell you right now. China, let's see, excuse me, give me 1 second. Inner Mongolia ISR. We are modeling this for 500,000 pounds in 28, getting up to 1.5 million by 2030. Maybe they'll hit that. Maybe they won't. Maybe it'll be more. Maybe it'll be less. Maybe it'll be nothing at all. I don't really know. But they're building that currently. And of course, it's a black box. So we don't really have great information coming out of there. The massive deposit of thorium that China was highlighting last month is fantastic. China just built the first molten salt thorium reactor in China. That came online last year or earlier this year, and high hopes for thorium powered reactors in the future. And it doesn't even need to be molten salt. Technically, the reactors that are operating globally can operate on thorium with a little bit of plutonium. How many of them are using that type of fuel? Not a single one. So for whatever reason, there isn't really the thorium fuel chain in place. Nuclear operators don't really like to screw around with fuel. And this is one of the reasons why the fancy types of, accident tolerant fuels, et cetera, I'm a little bit skeptical on those because the operators, they don't really like to mess with fuel. They know it works and they kind of stick with it. So will thorium replace uranium for the existing world's fleet? No. Will 50 years from now, will we have dozens, if not hundreds, of thorium powered reactors operating? I really hope so. And I think it's possible.
Okay, interesting. Yeah, I saw the first thorium reactor. I thought that was pretty cool because I remember we were talking about that for a while, and you're like, "Oh, don't even worry about it this cycle at all." And but we got one. At least that's a start. It's an experiment that we can watch in real time. Pretty
Yep.
cool. Okay, let's see. We're getting close here. Uranium File is asking about SPUT. What would it take for SPUT to get to a premium to NAV? Chances of SPUT re-entering the spot market as a buyer? I know recently they were getting low on cash, and somebody came in and actually, I think it was like 25 mil or something like that. Maybe just give us an overview on SPUT.
I love how little attention that raise got because I think it spoke profoundly
Yeah.
as to financial interest. For them to come in and be willing to pay a 5-6% premium to put cash in their pocket instead of buying in the open market spoke volumes in my estimation. So there's financial interest. Will they raise more like this? Wink, wink, hint, hint. What is it going to take for SPUT to trade at a premium to NAV? It's going to take the shorts to back off. It's going to take a much, much stronger rally than we just had. The rally we just had really didn't have a lot of enthusiasm to it, not big volumes, not breaking out, just kind of like a dead cat bounce off of the absolutely brutal first week of April dip. And the months of bleeding out leading up to that dip, now we've recovered some of that, but still year to date, these things largely are not looking that fantastic. So we need a more enthusiastic rally. We need the shorts to cover. And I think that there's been a lot of manipulation of SPUT over the past year. So if you are short equities and SPUT starts to move up and get close to a premium, what are you going to do? You're going to short the hell out of it to keep it from getting in there and raising cash. And I think that that's been a game that larger institutional players have absolutely played. And that game, maybe it's still being played. Eventually, it'll turn the other way. And those same institutions that are or were short equities will be long. And still, you saw a post from Art Hyde from Segre Capital a few weeks back saying half the pod shops in New York City are still short uranium. And these pod shops are basically, within a fund have a number of segmented pods that are focused on a specific sector within an overarching singular fund. Half of them are still short uranium. So we need that sentiment and that enthusiasm to shift the other way. Eventually that'll happen. I think SPUT will get to a premium again. It's been quite a few months. I think November was the last time they were at a premium, or maybe that was the last time they purchased uranium. I think maybe they were at a premium earlier this year. But either way, if they get closer to a premium again, even at a few percentage point discount, how much money is on the sidelines right now, ready to pay a few percent premium to put money in their pocket? Who knows? It's not
Okay.
nothing. I'll tell you right now, it's not nothing. So wink, wink.
Yeah, okay, this is Sprott's website. So this is essentially showing the discount here to net asset value. If this zero line is what you're paying for the shares is what the uranium actually costs, you can see that at the price right now, it's at about a 10% discount. But these guys came in and actually paid more, correct? They paid a premium. So they said, to heck with the discount, we just want in. And I don't want this to be lost on people.
Yeah. So okay. So my estimation, my memory was correct. It was November of 24, the last time they raised and traded at a premium. So obviously, it's been at a more persistent discount to NAV, and honestly, that is sort of the ultimate fate of a closed-end fund, unfortunately, or closed-end trust in this case. So yeah, the raise that they were willing to do at a premium, it's not like there was insufficient liquidity that they couldn't buy it in the open market. They absolutely could have. They chose not to because they wanted to do a few things. A, show the market that institutional interest is absolutely still here for this sector and for SPUT. B, allow SPUT to put cash into their balance sheet and not have to sell uranium. And so because you had a bunch of these quote unquote pod shops, like I just mentioned, that are short uranium, a lot of these guys, in addition to utilities, but a lot of the funds that are out there, maybe shorting equities, maybe not quite long equities, but are interested, have this theory, oh, SPUT's going to be selling pounds soon. SPUT's going to be selling pounds soon. SPUT's going to be selling pounds soon. Okay, so they would have had to sell 50,000 pounds. or 100,000 pounds, it wouldn't have done anything. Wouldn't have moved anything in terms of the spot price in order to put some cash in their pocket to pay their management fee, let alone raise any. They wouldn't be raising, right? They wouldn't sell pounds sufficient to have enough cash to buy pounds. That would be stupid.
Yeah.
It would just be put money in their pocket. So now this raise that this placement that they did at a premium is like, hey, we know what's going on. Now they're not going to have to sell pounds. And guess what? Maybe there's more interest there so that they will never have to sell pounds. Suck on that. So that was kind of that. That's basically what they came out and did. Whether or not there's more interest there, hard to say, but I'm telling you that it isn't nothing. So very good sign. Very good sign for SPUT. I don't know when they'll trade at a premium again, but it'll take a more enthusiastic rally in the sector to get them back within a lower discount, if let alone a premium. But it'll happen.
Okay. Let's see. Wrapping up here. Dirtier wants to know Justin's take on the bullish comments in Cameco Q1 earnings call Q&A. Had a lot of color on their assessment of the market, including what is or not coming online.
Well, I think that they had a lot of bullish comments. I'm not sure which this person is referring to specifically, but Cameco, how can I say this? Cameco has experienced what it's like to build a large underground complicated uranium mine in Saskatchewan. Now, the geology that they're dealing with is different than the geology where Arrow exists. So there's much more water intrusion into the sandstone. Arrow is in the basement. And so the water intrusion in the sandstone and the unconformity for McArthur River and Cigar Lake, they had to build and design and build freeze walls to literally freeze the groundwater around the mine to keep water from flowing in. So, but with that said, they've been there, they've done that. And essentially what I am reading, I want to say this carefully, is that they seem to be skeptical that the large projects that are being promoted by developing companies are going to struggle to bring the supply online that they're claiming they will be able to on the timelines that they're claiming. And essentially, and this is not just a theme to Saskatchewan or a theme that Cameco is highlighting here, but this is the broader big picture that is really, really important to understand. The companies that we're all investing in, we want them to get done what they're saying they're going to do. Ironically, we also don't want that to happen, because any timeline pushing out of any of these big projects is going to have repercussions in the physical market and a higher uranium price, which perversely moves those same equities. So, and that's our baseline. This is going to continue to happen. But the company is what they're telling investors, the utilities are also hearing. So let's use NextGen, for example. 42-month development timeline. It's going to cost just under $2 billion. It's probably going to cost more, but that's what they're saying. They have blown out the feasibility and the NAV, right? So the NPV of the project, they're basing on 29 million pounds of production for the first 5 years. So they are really accelerating the life of mine to those first 5 years, which dwindles after that, in order to just really pack in the NPV. What it looks like to the industry is they're pricing it for sale. Whether or not that's their intention, they've definitely checked all the boxes in getting this thing production ready. So kudos to them for that. They've done a great job with that. But what they are telling investors, the utilities are also hearing. So investors are saying, oh, this project is worth this much and it's going to be producing in 2030. And the utilities are like, well, why the hell would we want to come to market with you, Cameco, and sign these contracts at the prices you're asking? NextGen's going to flood this sucker in 4 years. That's what they believe. So what the investors are hearing is also the same thing that is contributing to the lackluster long-term contracting environment and volumes that are happening right now. So what's going to happen is these projects are going to face challenges. And when they do, the utilities go, oh, F, I need to come in and cover this off because might not get my uranium. Look at what happened. They signed contracts in December for first year delivery 29. They're not going to be able to do that. But they do have some uranium that they bought, right? That they paid what? They paid 80 something dollars a pound for it. But they do hold that uranium. So that gives them a little bit of a cushion. But this is going to be a theme for the next few years is these projects that the investors are seeing X, Y, and Z is going to happen. When X, Y, and Z doesn't happen, the shock to investors is the same shock that utilities will have because they believe what the companies are telling them in terms of production. And why wouldn't they?
Yeah, yeah. But then they
But
realized that Next Gen put too much money into G&A and advertising for NASCAR and not enough
yeah, no,
focus on
and I'm not
building a
even
mine.
saying this is not I'm not dishing on next gen at all. But what they've done in their feasibility study is let the market believe that there's going to be 30 million pounds of uranium in 4 years from now, and there won't be. So that's the utilities have yet to come to that realization. And to end, because I know you got to go, to end this on a quote from Crux Investor that was put out a brilliant piece last month. There's a mirage of supply. That's what it looks like. There's a mirage of supply. And there's unrealistic expectations on behalf of both investors with the companies and utilities for expected supply. So I highly recommend everybody. I don't remember what it was called. Just go back and look at their material from about 3 weeks ago. It's an absolutely brilliant piece. But yeah, a mirage of supply. I couldn't put it better.
Good quote. I'm going to use that. Thank you, Justin. Always a pleasure. If people want to follow you and your work, what can they expect when they sign up with you at Uranium Insider?
They can expect 100% coverage of this sector on a daily basis. We just live in this sector every single day. Very, very, very important to understand what's going on in the physical market. I gave some pretty good detail in today's chat, so thank you for that opportunity. But this is something that we cover in detail for our membership. And if you understand what's happening in the physical market, that will give you the confidence to execute your own investment decisions rather than flying blind. When price becomes narrative, when there's a lot of fear in the market, when people believe that spot price is going back down into the 40s, we were there to say, yeah, that isn't going to happen because we knew what was happening in the physical market. So the drawdowns that we saw, either that gave you confidence to hang on through that drawdown and now you're back up a little bit from there, or if you're me, and you have confidence in this in the mid and long term, when you see RSI at 20, you get crazy long with leverage. And then the next month has enormous gains. So that's the type of confidence that we think is extremely important for fundamental investing. If you want to trade the moving averages, go ahead. You don't need our service. If you want to fundamentally invest and be able to have the confidence to put money to work when everyone else is selling, that's really where the leverage can come in.
I always say if you want to play the beta, buy one of the ETFs. If you want to play the alpha, follow Justin. We will put Justin's links in the pinned comment and the notes below. Justin, thank you for coming back on the show.
Always a pleasure. Good to see you, Steve.
Good to see you as well. And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.